Welcome back to AlgoBot, your friendly guide to the world of automated trading on MetaTrader 5. I'm AlgoBot, and in today's educational deep dive, we're exploring an expert advisor called the Median Slope Trend Writer. This strategy is built around a robust statistical tool known as the Theil-Sen slope estimator, paired with the average true range. It's a trend-following, pullback-style approach. Over the next few minutes, you'll learn how it reads the direction of the market, how it times its entries, and how it manages risk with a stop and a target. As always, this is educational information only, so let's dive in. Let's start with the big picture. The Median Slope Trend Writer is a trend-following expert advisor that looks to join an existing move on a pullback rather than chasing a breakout. What makes it a little different from the usual trend tools is the way it measures the trend. Most moving averages and regression lines are fitted using ordinary least squares, which minimizes squared error. The trouble with that method is that a single news spike or a sharp wick, which happen all the time on foreign exchange pairs and metals, can drag the fitted line around and manufacture a trend that isn't really there. To avoid that, this strategy uses the Theil-Sen slope estimator. Instead of fitting one line, it looks at every pair of closing prices inside a window and calculates the slope between them. Then it simply takes the median of all those slopes. Because the median ignores extreme values, this reading stays calm until nearly a third of the sample is contaminated. In plain terms, the trend red stays clean even when one row bar tries to distort it. That raw slope is expressed in price per bar, which would mean something different on every symbol. So the strategy divides it by the average true range, turning it into a scale-free reading, roughly the fraction of an ATR of net drift per bar. This lets the very same settings behave consistently, whether it's running on the euro against the dollar, on gold, or on an index. Once a genuine trend is confirmed, the expert advisor waits patiently for a pullback that reclaims its robust fair value line, and it protects every position with a stop loss and take profit both measured in multiples of ATR. This kind of approach tends to appeal to traders who prefer a patient, rules-based, trend continuation style, and who want a system that adapts its distances to current volatility. Remember, trading always involves risk, and losses are a normal part of any strategy. Now let's walk through the exact logic, step by step. Everything the Median Slope Trend Writer does is measured on fully closed bars, so the signal never repaints. That means what you see in the backtest is what you would have seen in real time. First, the strategy gathers a window of recent closing prices. The size of that window is set by the SlopeWindow parameter, which defaults to 24 bars. Think of this as the trend memory. Inside that window, it calculates the slope between every possible pair of closes and takes the median of them all. That median is the robust Theil-Sen slope. Next, it divides that slope by the average true range, using the ATR period parameter, which defaults to 14. This produces the normalized slope, the net drift per bar, in ATR units. The strategy then compares this value against the SlopeThreshold, which defaults to 0.03. If the normalized slope is at or above the positive threshold, the market is classed as an uptrend. If it's at or below the negative threshold, it's a downtrend. Anything in between is treated as flat or choppy, and the strategy simply stands aside and waits. This filter is the gatekeeper that keeps it out of directionless conditions. When a trend is confirmed, the expert advisor builds its robust fair value line, using the median slope and a matching robust intercept, and it watches for a pullback that reclaims that line. For a long, the market must be in a confirmed uptrend. The prior closed bar must have dipped below the robust line, a genuine pullback into value, and then the just closed bar must close back above the line. That reclaims signals the trend resuming, and the strategy places a buy. A short is the mirror image. In a confirmed downtrend, the prior bar pokes above the line, and the just closed bar closes back below it, prompting a sell. Risk is handled symmetrically and in volatility terms. The stop loss sits at ATR-StopMult ATR away from entry, defaulting to 2 times, and the take profit sits at ATR-TpMult ATR, defaulting to 3 times. With those defaults, the target is 1.5 times the risk distance. The expert advisor holds only one position per magic number at a time, letting that stop and target manage the exit without interference. Let's read through the actual MetaEditor code on screen. At the top are the input parameters you can adjust in the Expert Advisor settings. SlopeWindow, defaulting to 24, is how many closed bars go into the Theil-Sen calculation. SlopeThreshold, at 0.03, is the minimum normalized slope needed to call something a trend. ATR period, at 14, sets the average true range used both for normalizing the slope and for sizing the exits. ATR-StopMult and ATR-TpMult, at 2 and 3, set the stop and target distances as multiples of that ATR. Then we have the trade volume in lots and the magic number that tags this strategy's positions. Now look at the long block. The condition reads, if we are in an uptrend and the prior close was below the robust line, and the current close is back above the line. When all three are true, the code reads the ask price as the entry, sets the stop loss 1 stop distance below entry, sets the take profit 1 target distance above, and calls trade.buy with the lot size, the stop, and the target. The short block is the exact mirror. If we are in a downtrend, and the prior close was above the line, and the current close is back below it, the code reads the bid price, places the stop loss above entry, the take profit below, and calls trade.sell. Notice both sides use the same ATR-based distances, so the risk framework is symmetric. And that return statement means only one action is taken per bar. Let's bring this to life on the chart. The blue line weaving through the candles is the robust trend line, the Theil-Sen fair value that the strategy builds from the median of all the pairwise slopes. Watch how steadily it moves. Unlike an ordinary regression, it doesn't lurch when a single wick pokes out, and that steadiness is the whole point. On the left, the first candle closes above the blue line, and the line is angling upward. That upward tilt is what the normalized slope filter is reading. Because the slope divided by ATR sits at or above the threshold, the market is classed as a confirmed uptrend. So far, the strategy is only watching, waiting for a pullback into value. On the second candle, price eases back, and that bar closes below the blue line. This is the pullback the strategy wants to see, a dip into fair value inside an established uptrend. But a dip alone is not enough. The strategy needs proof the trend is resuming. That proof arrives on the very next candle, which pushes up and closes back above the robust line. Both conditions are now satisfied, the prior bar below and the current bar reclaiming above, so the buy entry marker appears. Notice the entry is taken on the close, on a fully formed bar, never mid-candle. From there, the uptrend does its work. The following candles step higher, each one building on the last, and the blue line rises with them, confirming the drift is intact. Price extends until it reaches the take profit marker several candles later. That target sat 3 ATR multiples above the entry, while the protective stop was 2 ATR multiples below, giving this illustration a reward to risk of 1.5 to 1. The long idea is now complete. Now watch the character of the market change. Around the peak, the candles stall and roll over, and the blue robust line flattens and begins to tip downward. Once the normalized slope falls to or below the negative threshold, the regime flips to a confirmed downtrend, and the strategy starts hunting for a mirror image setup. That setup forms next. One candle pops upward and closes above the blue line, a pullback against the new downtrend, back up into fair value. Then the following candle rejects that level and closes back below the robust line. This is the short version of the reclaim, the prior bar above and the current bar back below, so the sell entry marker prints. The logic is perfectly symmetric with the long side. From that sell entry, the downtrend carries price lower. Each candle makes a fresh low, the blue line slopes down alongside them, and the move continues until it reaches the lower take profit marker. Just like the long, the stop sat 2 ATR multiples on the other side of entry, and the target sat 3 multiples in the direction of the trend. Step back, and you can see the rhythm the strategy is trying to capture. It never buys the top or sells the bottom. It waits for a robust, outlier-resistant read on direction, then it joins the trend only on a pullback that reclaims fair value, and it lets a volatility-based stop and target manage each trade from there. Of course, not every setup plays out this cleanly. Trends can stall, pullbacks can keep going, and stops are reached, which is exactly why disciplined risk control sits at the heart of the design. And that brings us to the end of our look at the median slope trend rider. Today we explored how it uses the Theil-Sen robust slope estimator to read trend direction while shrugging off outlier bars, how it normalizes that slope with ATR into a scale-free reading, and how it waits for a pullback that reclaims its fair value line before entering, always protected by an ATR-based stop and target. Everything here is for educational purposes only, and it is not financial advice or a recommendation to trade. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and share your thoughts in the comments. You can find more educational resources over at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.